Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2, we'll take a closer look at each of the quantum computing stocks we picked, discussing their potential, market position, and what makes them stand out for 2025 and beyond. Emerging players and startups. These smaller companies offer aggressive growth potential, but higher risk. IonQ specializes in trapped ion quantum computers, which are more stable than superconducting qubits. They've partnered with Hyundai for automotive simulations and recently beat key performance targets. The stock is volatile but could surge with new commercial deals. Rigetti Computing. Rigetti focuses on hybrid quantum classical systems for near-term uses, like financial modeling. Their stock dipped post-SPAC merger, but partnerships with AWS and Quantum Cloud Access keep them on the radar. D-Wave Systems. D-Wave is a leader in quantum annealing, a method optimized for logistics and AI. Though not yet publicly traded, they've filed for a NYSE listing and already work with MasterCard and Lockheed Martin. Quantum Computing Inc. This small-cap company focuses on software solutions for defense and energy sectors. Their early-stage projects are high risk, but could pay off if government contracts ramp up. Investing in quantum computing requires patience. Giants like IBM and Alphabet offer stability, while startups like IonQ could deliver explosive gains. Diversify across both to balance risk and opportunity. How to evaluate quantum computing stocks. Quantum computing stocks aren't like typical tech investments. Because the industry is still emerging, traditional metrics like PE ratios don't always tell the full story. You need to dig deeper into what makes a quantum stock truly promising or overhyped. Here's how to separate the real contenders from the pretenders. Key metrics to consider. Look beyond stock charts. Focus on these three factors to gauge a quantum computing company's potential. Financial health. Quantum research is expensive. Check if a company has strong cash reserves or backing from major investors. A clear path to revenue, either through commercial partnerships or government grants. Reasonable debt levels. Startups burning cash without progress are risky. Innovation pipeline. The best companies don't just talk about quantum, they deliver. Look for patents filed or peer-reviewed research. Regular milestones, e.g., improved qubit stability, new algorithms, whether their tech is scalable. A lab breakthrough means little if it can't be commercialized. Competitive advantages. Ask, what makes this company stand out? Hardware. Some firms focus on superconducting qubits, like IBM, while others use trapped ions like IonQ. Each has pros and cons. Software. Companies like Microsoft build tools for developers, which could dominate if quantum goes mainstream. Partnerships. Siemens or JP Morgan don't partner with just anyone. Real-world collaborations signal credibility. Red flags to avoid. Not all quantum stocks are worth your money. Watch out for hype without substance. If a company's press releases sound like sci-fi but lack technical details, be skeptical. No clear revenue model. Quantum is a long game, but firms should explain how they'll make money before funding dries up. Overpromising timelines. Quantum breakthroughs take years. Any CEO claiming commercial quantum in 12 months is likely exaggerating. A good rule: if a company spends more on marketing than R&D, tread carefully. Real innovation happens in the lab, not on Twitter. Investing in quantum means balancing patience with scrutiny. The right stock could be transformative, but only if the science and business fundamentals align. Strategies for investing in quantum computing stocks. Quantum computing stocks can be exciting, but they come with high risk. You need a smart approach to avoid common pitfalls. Let's look at proven strategies to balance opportunity and caution in this fast-moving sector. Diversification and portfolio allocation. Putting all your money into quantum stocks is risky. The technology is still developing, and not every company will succeed. Instead, spread your investments to manage risk effectively. Here's how. Limit exposure. Keep quantum stocks at 5 to 10% of your total portfolio. This way, you stay positioned for growth without overexposing yourself. Mix with stable sectors. Pair quantum investments with established industries like healthcare, energy, or consumer tech. These can balance volatility. Layer your quantum holdings. Invest in a mix of blue-chip tech stocks, e.g., IBM, Google. Slower growth, but safer. Mid-sized innovators, e.g., IonQ, Rigetti. Higher risk, higher reward. Quantum ETFs or funds. For broad exposure without picking single stocks. Think of quantum as a speculative bet, not your portfolio's foundation. The goal is to benefit from breakthroughs while staying protected if progress slows. Staying updated on industry trends. Quantum moves fast. What's cutting edge today might be outdated in 6 months. To invest wisely, you need to stay ahead of developments. Here's where to look. Research reports. Firms like McKinsey, Gartner, and CB Insights publish quarterly updates on quantum advancements. Earnings calls. Listen to what CEOs reveal about R&D progress or setbacks. Pay attention on calls from IBM, Google, and pure-play quantum firms. Government announcements. Follow agencies like the U.S. Department of Energy or China's Ministry of Science. Policy shifts or new funding can move stocks. Tech journals. Nature, Quantum Information, and MIT Technology Review break down complex advances into readable insights. Set Google alerts for terms like quantum error correction or qubit stability to catch breaking news. The more informed you are, the better you can spot long-term winners or exit shaky bets early. Quick tip: if you're time-crunched, focus on 2 things: partnerships and patents. Companies landing deals with Fortune 500 firms or filing new patents are usually making real progress. Quantum investing isn't just about buying and holding. It's about staying engaged, adjusting as the tech evolves, and knowing when to step back. Keep learning, stay patient, and let the science guide your decisions. The bottom line: quantum computing stocks offer a unique mix of high reward and high risk. The potential for massive growth is real, but the technology is still young and not every company will succeed. Before investing, do your homework. Look into financial health, innovation, and partnerships. Consider starting small and diversifying to spread risk. If you're unsure, talk to a financial advisor who understands tech investments. Despite the challenges, quantum computing's future is bright. The breakthroughs happening today could reshape industries tomorrow. For those willing to research carefully, the rewards could be worth the wait. Have you explored any quantum stocks yet? Share your thoughts below. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.